Welcome to the Family Office Sherpa Podcast. I'm your host, Shaun Parkin, founder and managing director of Whole Road Investments. In the podcast, I will be providing practical and implementable advice for those looking to build, manage, or service a family office. In this episode, we are digging into family office investments, specifically how they make decisions and build portfolios.
This is the Family Office Sherpa.
So if you're a wealth manager or fund manager, hopefully this provides some guidance on how to build these relationships. If you're a family office, this can be a guide on best practice. Now, I've been on both sides of this equation, having worked for a fund manager in State Street Global Advisors, as well as establishing investment strategies for family offices as part of their investment committee or an advisor to the investment committee. So I have seen what has worked for me at State Street and to be honest, what didn't work, and how fund managers can be selected. Not all family offices choose managers and are seeking the same thing, but let's go through an overview of what they look for. Number one, what they're looking for is skills and capacity. Family offices seek expertise in asset classes where they themselves lack internal skill sets or bandwidth. Like I use the term capacity because that's really where a lot of the heavy lifting can be done by external advisors. A lot of research and implementation. What we're looking for is those that can take on a lot of that external heavy lifting. Often managers are referred in by trusted advisors or those established by previous contacts within the investment team. Number two, unique opportunity. Family offices have a rich history of backing new funds or new investors, both as an investor into the fund themselves, and then we are starting to see them buy into the fund manager business as well. And that can be an alignment of interest as well as an ability to get access to staff and things like that. Number three, IP transfer or intellectual property transfer, ideation transfer. Sometimes the reason a family office chooses one manager over another comes down to what the perception, or real or otherwise, of the willingness of that manager to provide research, ideation, IP transfer as an umbrella term. That's super valuable, especially things like financial education, asset class education, things like that. What we're looking for, or what some family offices are really looking for, is to say, we're going to partner with this fund manager and we're going to get not only the strategy, so the investment piece, but we're going to get all these things come over as well. Sometimes they write them into the mandate. Mandates are not usually used that heavily by family offices that I deal with, but you can get really specific around sort of what we're looking for from this relationship. Number four, client service. To quote one large single family office that I spoke to, they invested within the large global manager, initially started as a global equity allocation, but the level of service provided was so good, so high level, that they ended up getting exposure to their multi-asset class team and getting a lot of transfer of information there, and they ended up putting more money to work with that manager purely based on a lot of the client service piece. Request for information, ability to meet with very credentialed and highly skilled people within the business. That was a large reason why they not only landed with that manager but expanded as well. Number five, introductions and network. Large family offices use global wealth managers for manager introductions. If you look at the big global managers, one of the reasons why is because they do have access, and they also do have internal teams that have access as well. One thing that they were really clear on, though, and this is something to be noted, is that they're not interested in being intermediated by that wealth manager or private bank or whatever it ends up being. They would still like to be engaged directly with the manager and talk to the managers themselves. They don't want to have someone constantly being the interpreter or having to go through different layers of people to get access to that individual manager themselves. They like the introduction, but they still want to have clear line of sight. Number six, some mentioned that they would not invest with or alongside, like I said, if they weren't given direct relationships. So, they will go alongside managers, wealth managers and intermediaries and introductory agents and stuff like that. But they're very keen on speaking to the people that manage the money themselves. Number seven, there's an increased use of vehicles like exchange-traded funds. And the reason why they're quoted from the families themselves tends to be around they don't have to interact with there's no application and redemption necessarily. You can just click buy, and ultimately, if you wanted to exit, you click sell. You've already got a trading relationship with a broker or a wealth manager or something like that. You don't have to then have a relationship with the asset manager. So we are starting to see an increased use of ETFs. ETFs are also, there's a broad range of them. There are an increasing number of them, not just where local domicile. If we have family offices here that might be in Australia, but they might have a US facing book, it makes it very, very easy for them to build out strategic and tactical portfolios using exchange traded funds or listed funds because they're easily implementable, easy to rebalance portfolios and things like that. Not to say that we only use them, but we do use them increasing amounts for sure. So what does the selection process look like? As always, everyone has their own method and there's no hard and fast rule here, but let's look at some feedback that we've received, right? So establishment of a marketplace, that looks like their selection process. One discussion was around not only are we interested in what we have, but we might put together a marketplace for different scenarios. As usual, if the market stays as it is, or potentially if the market goes significantly higher or lower, and when I say market, in terms of like a general, like across all the asset classes that we speak on, but we want to have backup managers or managers that we might not implement with now, but we might implement if something specifically happens. So, during COVID and things like that, we saw a move towards maintaining a list of potential partnerships with distressed credit and things like that, because it allowed us to, or allowed the family offices to implement easily once they had those relationships in place. So when they establish a marketplace, it's necessarily saying these are the different scenarios that might appear, but also importantly, if something happens to an incumbent manager, we want to have a good backup. We don't want to have to be out of the marketplace and things like that. So once they have a list of managers they're comfortable with, they manage the asset allocation through, say, increase and decrease weights or within that part of the cycle. It's not static, however, nothing is really, and they're constantly monitoring them. This is where we rely on our counterparties to do some of the heavy lifting, like we mentioned, what we're looking for, from the wealth management intermediary side, to bring us, new ideas, new managers, things like that, to, again, go back to that sort of more marketplace structure. Network and due diligence is so huge within this sector, using a mix of networks from our internal team and our internal investment team. So we're really looking for asset classes outside of the skill set within the office, such as, like I said, private markets and those more inefficient and idiosyncratic asset classes. We look to maintain and develop relationships with those that might have better or increased skill sets within that. Trusted advice. They all come back with feedback, which is there's an advisory board, and within that advisory board, they're looking for deep industry knowledge, and they're looking to leverage off that for manager selection a lot of the time. Some managers are found through a database, like a universe, like similar to how some manage their stock portfolio. This is the universe of managers through a relatively straightforward database, and then we whittle it down internally or using referrals and, like I said, trusted advisors. Another way is that they have relationships, or they maintain relationships with larger institutions and larger asset owners. They sit with it, they can be at the individual level or they can be at the actual total fund level. And when potentially those people within those larger funds move to their own, sometimes the money follows them as well. And one said they aggressively allocate capital to people that have developed a strategy external to an institutional manager that they might not be able to get access to. So those sorts of things are really important. For those in the funds management space, this is a really good indication of why it's always really important to maintain these relationships, even though there might not be a specific fund flow initially. There is an element of, once that trust is developed and things like that, then we start to look at allocations further down the track. The other thing as well is, they do create connectivity with other family offices, especially those, larger ones with might be a little bit more resourced in terms of research and counterparty management, things like that. We look to them, or they look to them for counsel, for expertise. We're starting to see a movement towards a more collegial sort of interaction with family offices. Part of, I guess, Hall Road Investments' value proposition is to maintain those relationships, but also say, well, I know a family that is going through a similar situation or journey as you. Maybe it's worth having a discussion with them, because you might be able to leverage off some of the challenges that the learnings that they have from those challenges. What went well, what didn't? What do you know about this manager? Who should we talk to? Things like that. So there's some of the aspects, some of the ways that people select managers. In terms of external counterparty use, asset consultants or investment consultants, or whatever you would like to call them, there's some seen as there's some real value there, in particular on the technical aspects, such as deep dive portfolio reviews and things like that from a lot of the institutional style ones. We're starting to see a little bit more around sort of quarterly factor reviews, in particular on the equity book. Uncertain, because a lot of the family offices don't have a lot of oversight, a deep oversight over the portfolio. So it's really good to rely on those sort of institutional asset investment consultants that have those big data sets that we can utilize. Sometimes they find the language within this space a little bit more geared towards committees, and that kind of makes sense. Whereas these family offices are much more coal-faced. They can make decisions really, really quickly. So sometimes you do see a little bit of disconnect between the advice between institutional asset consultants and family offices that might have a very flat, non-committee-led investment process. Some family offices are really specifically seeking out those relationships with consultants, especially on the alts side, which can be difficult to find, but because they're not really active in this sort of mid-market space. And sometimes it's really hard just to find a suitable contact. So anyone within that alts research consultant space that's looking at family offices as a potential client base, potentially make it easier for people to find you. Some refer to a more plug and play type model, which is sometimes super helpful when you're talking with consultants, because they can say, this is our expected return expectation. Can you provide research on this particular manager or these particular managers or this sector? What's your preferred manager within this? And the historical data sets. And we can sometimes leverage off the consultant relationships to get institutional style fee structures, which can be super helpful as well. Another group that we use for this manager selection the family offices use for this manager selection is wealth managers. There is a bit of feedback in that the wealth manager space tends to try and ring fence these a little bit, and are less inclined than if you're going directly with the asset manager to provide assistance without really specific revenue attached to it. It's not true for all, but the feedback is it's a little bit more, well, we'll give you this information to a certain degree, but we'll help you with this, but there needs to be either an actual fee being paid, or there needs to be some direct line of sight of revenue, which makes sense. It's all commercial, but making that decision whether to assist or not is up to the individual wealth managers themselves. There is a difference in the wealth manager model in different jurisdictions, so the way that these models work might not be suitable for everybody. And there is in some jurisdictions there a little bit more a product centric mentality, especially at the more bank aligned or corporately aligned wealth managers. But yeah, they can be super helpful in terms of getting some of the heavy lifting done. Nearly all of the family offices that I talk to prefer the wealth manager to be more of a guide than to provide that asset manager solution, in terms of being good at bringing ideas that are suitable for the portfolio is really, really helpful, but also making sure you understand the investment policy and strategy and the governance structure, so that there's not a lot of noise. So if you're a wealth manager listening to this and you're saying, well, how do I get my family office clients to be more interactive and things like that? Sometimes it's just around being a little bit more thoughtful around the way that the portfolio is being constructed, and not just bringing the next best idea to them. So, and we are starting to see, well, and always have really, which is sometimes the sub-portfolios or the portfolios managed by the smaller ones can be managed incredibly well by direct wealth manager relationships. So, and then that can expand as well as the assets might move into the next generation. So we are starting to see that, which is super helpful in terms of getting family members that might not be exposed to wealth management and financial services and things like that to have a single point of contact that can help them across building portfolios, but also education and things like that. So some helpful hints. The onboarding and initial interaction has to be really well worked. The larger institutional asset managers with family office having worked for one, it is a new process that is quite, especially the big global ones, just making that onboarding easy, because sometimes the first hurdle, making it difficult, can really just mean that the relationship fails and the family's not going to go along with the investment, or certainly not make more investments there. Like I said, some of the feedback is that the client service and the onboarding was so well done that they started moving assets more towards them. Direct referrals from one family office to another is always going to be, like, those bona fides are always going to be really powerful, especially for sort of more difficult to access asset classes. And, those that make implementation, again, easy are always going to get talked about well behind their backs, which is what we all want. Like I said, be helpful on operational challenges. If you listen to the previous podcast where we talk about operational components like reporting and counterparty management, things like that, if you can be helpful there, it's really, really powerful. Just to be able to get our reporting structure, the transfer of information from the asset manager portal to our own reporting structure, making that easy, making the direct connectivity, or at least understanding what we're trying to do, really helpful. So, get your operations department to be a part of the process as well, and part of the client service as well. There is that perception in the larger firms that we deal with that, we're not getting as much direct access, or the families are not getting as much direct access to those managers. So some specific managers were cited, and the reasons why they use them is that they made their investment teams available. And they made them available in a way which was not just, they just happened to be in the country at the right time. Would you like to come to a lunch or something like that? Like, have them understand what we're trying to achieve, and then have that conversation, not just a normal, and certainly not just when there's a new strategy that you're looking to have people invest in. And there's a real move towards engaging with managers that have a little bit more open mind when it comes to things like active versus passive. When I say passive here, we're talking about indexing as opposed to passive, which a lot of family offices use as a terminology, which means that they don't have direct control over the investment. But we're talking about indexing versus active management. What we're really looking for is this ability to sort of understand what the client is looking for. And if you don't have that particular investment, at least understand that there might be a viable opportunity outside of what you do, but really being thoughtful around the way that it works. Active versus indexing works in a total portfolio perspective across multiple investments, not just, we're active, so that's all we talk about. There's also the other type of active, which is that direct investment piece. So if you've got any ability to assist with that, which can be really difficult to do due diligence on companies that are direct investments, and that can be really powerful as well, because even though we are starting to see a little bit of a pullback in that direct investment piece, there is still such a significant amount of heavy lifting that needs to be done there. So if you as an asset manager or fund manager can be helpful, then that can be a really powerful component of that relationship. So hopefully that's helpful. You can find me on LinkedIn. If you're interested in more family office insights, subscribe to the Family Office Sherpa newsletter, which comes out every 2 weeks. You can find that at hallroad.com.au. And hopefully you enjoy the podcast. Thanks again.